Hey traders, Jason here from Love Brothers. So in this video, I want to talk about similarities between the internet and AI, between the dot-com bubble and what's going on today. Okay, the internet was this new technology. It was going to completely and totally change everything. And today, AI is a similar in that regard. It is going to completely and totally change anything. And I'm seeing some price movement in the charts today that is very similar to what I saw back in the dot-com bubble days. I got started trading in 1999. This stuff is like vividly etched in my mind because I lost a ton of money because I didn't know what I was doing. Am I predicting we're going to have a repeat of the dot-com bubble bursting and a 50% drop in the market? I'm not going to predict that, okay? But I am seeing enough similarities that as traders, we just need to be really, really careful of what's going on. Before I start, I'll say that what I see is a lack of upside progress from leadership stocks. Okay, they say, read a lot of books about the stock market, and they'll tell you like watch the leaders, watch the leaders, watch the leaders. Like if the leaders are doing well, then the market's fine. If the leaders pull back, then that by itself is a sign. You can't ignore that. All right, so let's go. I'm going to look at a bunch of charts from 1999, 2000, and then I'm going to look at charts from today, and you'll see similarities. All right, so here is the S&P 500, mostly in basically end of 1998, 1999, and 2000. This is the S&P 500. Okay, we had a new high. We know we had a all-time high in March of 2000. Market fell, and then we practically matched the new high in August, September later that year. Okay, now let's look at some of the leadership stocks from that area. So here's the S&P, and I've superimposed Amazon on top of it. Obviously, with that market new high in March of 2000, Amazon was already down quite a bit. Okay. Way more than 20%, and then the S&P dropped, recovered back to its high, and Amazon just kept going down. So market basically flat for the first 7-8 months of 2000, and Amazon had gotten crushed. Okay, Amazon was an internet company. It was one of the next. It was like an up-and-coming company. Here is Cisco, much more established. Cisco matched the high in March. The market, the blue line, fell and then recovered, whereas Cisco fell even more, recovered some, and then moved flat. So you can see the gap here between Cisco and the S&P, where it could not match. Cisco could not match the market. Okay, so it was like a picks and shovel stock. It was like the backbone of the internet, and the fact that it couldn't match the movement was a little bit of a warning. Here's eBay. Okay, it matched the market here. Okay, S&P drops, recovers, eBay drops even more, and then flattens out and doesn't recover and then continues down. So it too was another one of those stocks that was an up-and-coming internet stock that was going to change the world, and yet it could not keep up with the market. So a warning was given. Here's Intel. Matched the move into the March high, matched the move into the August-September high, but then the market fell a pretty normal 15 to 20%. Okay, Intel got cut in half. Okay, so Intel was one of those, hey, if you're going to build out the internet and you got all these hosting sites and everyone's buying a PC and getting on the internet, Intel benefited from that, and then out of nowhere stock got cut in half in a relatively short period of time. Next up, here's Microsoft. Okay, could not match the high over here in March. Okay, Microsoft was already down off its high. Market falls, recovers, prints a new high over here. Microsoft is nowhere to be found. Okay, over here, S&P drops. It's a good solid drop. The top here is 1525. Over here is 1350. So we're talking probably like 16, 17% without crunching numbers. And then Microsoft is all the way down over here. Okay. Top over here at 34. This line over here is like 19. So it didn't quite get cut in half, at least not yet. But definitely, you got all those, everyone's buying a PC, everyone's upgrading every year, every 2 years, they're all getting Microsoft software. Microsoft's going to play a role in powering all this stuff. They're going to have a search engine. And yet the market fell and recovered. Microsoft fell a lot more and then did not even come close to recovering. All right, one more chart. Qualcomm, market higher high here, Qualcomm lower high. Again, market drops, recovers practically back to its high. Qualcomm drops a heck of a lot more. It got more than cut in half here. And then, market's making a new high in October or August, September, and Qualcomm is, still down here at a 50% loss, more than 50% loss. All right, now here is the S&P 500 today. Okay, so this goes back to September of 2024. We got all of last year, and we got the first month and a half of this year. This is the S&P 500. Let's check out some of the I don't want to say up and coming tech stocks, but these are tech stocks. Some of them are like newer companies that are leading the charge. Some of them are older tech stocks that are going to still play a role. Okay, so here's the S&P 500 versus Microsoft. We have a new high in October. Market falls, another new high here, new high here, new high here, new high here. And look at Microsoft, just down, 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 down. It looks exactly the same as 25 years ago when the internet, when signs of the dot-com topping were in place. Here's NVIDIA. Both of them new high in October of last year, just a few months ago. Market dropped, recovered, several new highs here. NVIDIA dropped even more, and it has not recovered. Okay. Here's Tesla. New high with the market here in December. That's nice, but the market has moved sideways and Tesla's just been down, 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 down. So, the significance of these is with AI, you have data centers, you have chips that need to go in data centers. We're going to be there. We're going to do robots. We need energy to power these data centers. We're going to have a space aspect because we need communication networks in place. We might even put data centers in space. So that's the AI backbone. So any of these stocks that are dealing with that kind of stuff are the ones that I want to focus on here because they're it's supposed to be the leaders. Okay, and they have been, because you can see these charts that as of just a couple months ago they were at their highs. So here is Broadcom. So Broadcom is certainly going to play a role in the chip space. And you can see new high here in December. Market goes down and goes back up to new highs and moves sideways. Broadcom down, 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 making no attempt. Next up is IREN. New highs together over here in October, November. Market corrects and then recovers. IREN corrects a heck of a lot more. Makes a run here in January, but now it's well off its high, while the S&P is not far from its high. Next up, Nebius, similar situation. We have higher high over here with the S&P, lower high over here with Nebius. Market corrects, recovers. Nebius is down, does not recover. Next up, Oklo. Okay. Both making, S&P new high over here, Oklo lower high over here. S&P corrects, recovers. Oklo is just down, 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 getting cut in half. Okay, Palantir, new highs together over here. Market corrects, Palantir corrects. Market rallies back to a new high. Palantir gets kind of close, okay? That's probably good enough. It's not a huge warning, but then market moves sideways, printing a few more highs, and Palantir is just down, down, down. And finally, Rocket Lab, okay? Both make new highs together just last month, just a couple weeks ago. Market corrects, goes back to a new high here, corrects, gets pretty close, and Rocket Lab just in the beginning stages of a massive divergence as it goes down. Okay, so those stocks are like the next generation. Okay, they're supposed to be today's leaders. If AI is the new thing that's going to be completely changing everything, You got data centers, you got power for the data centers, you got chips for the data centers, you got space, you got robotics. And yet in every single case, they started to not match the new high back in October. And then when the market hit a new high earlier this year, a lot of them were well off their highs. And even Rocket Lab, which has held up the best because it made a new high just a couple weeks ago, it too has fallen off. So huge similarities. Okay, internet completely, totally changing the world, and yet we're told watch the leaders. If the leaders can't keep up, then that's a big problem. That's what happened in 99, 2000 as the S&P printed a new high in March of 2000. All these top leadership stocks had already come off their highs, 20%, 30%. Some of them got cut in half, and then when the S&P practically matched its high in August, September of 2000. None of these stocks were even close, okay? And these stocks that I'm showing you, they're the survivors, okay? They're the ones that are still in business. There's 1,000 stocks out there that formed similar divergences that don't exist anymore, okay? Compare that to today, AI, data centers, power. Again, I don't need to repeat it. It's like these stocks are starting to come off. These are the leadership stocks. These are the stocks that are supposed to be front and center, leading the way, but they're all pulling back. They're all already down 20, 30%. Some of them have already been cut in half. So I'm not predicting a repeat of the dot-com bubble bursting. I'm not predicting the market's going to fall 50%. But we need to be really, really careful, because if these are leadership stocks, and they can't keep up, market's not going anywhere. The market is not going to be pulled higher by materials or gold. It's just not going to happen. Okay, it's just not going to happen. Best case scenario right now is the market just kind of grinds sideways in a range. Worst case is we get a legit 15, 20% drop. And then I guess that's not worst case, but that's like a realistic scenario to get a realistic 20% drop. And if there continues to be deterioration between these so-called top leadership stocks of the next generation, then we could get something more. All right, we'll see you next time.